Good morning. Selling a business and commercial real estate together, and what actually creates the most value. And most owners assume the best strategy is simple: sell the business and the real estate together. But in reality, that decision alone can swing your total exit value by hundreds of thousands and sometimes millions. And if you're a business owner or investor in Houston, Katy, or Fulshire, understanding how buyers think is what separates average exits from strategic ones. So the core question in this topic is what's going to create the highest value for my clients? And if you're not just selling an asset, you're choosing a buyer pool. So you have to make sure your buyer pool aligns with what you're offering. And that buyer pool really is going to determine the pricing that you could capture, the financing options, but also the deal speed and the risk. So let's break all that down for you. So option one is sell the business and real estate together. And the pros of that, it's simplicity. You got one transaction with one buyer and a clean exit. Two is you have owner user appeal. So it's ideal for SBA buyers, particularly strong for restaurants or medical users or service businesses. Three, there's financing leverage. So SBA loans can fund both the business and the real estate and often allows for higher leverage, lower down payment. So some of the cons there is that you may have a potentially smaller buyer pool because you're going to need someone who wants both the business and the real estate. Two is there's a value blending problem. So business is valued on cash flow. So the two main metrics there are seller's discretionary earnings, or EBITDA, earnings before interest, taxes, depreciation. And they don't always align as far as the numbers, and there's the potential for communicating that value. So you have option two where you can sell them separately. And the pros there is you're going to have maximum buyer competition for both sides. But you have business buyers for the operating side, and also real estate investors who are looking for the passive income. Two, there's a higher real estate valuation. So investors price loans or their offers based off of the lease terms and the tenant strength and the cap rate compression in the area. Three, there's flexible structuring. So if you sell the business first and then lease the property back and then sell the real estate as an investment asset, that's another play. So let's look at some cons there. It's a more complex execution and two transactions, and there's lease structuring required. Two, there's timing risk. So the business sale must align with the lease and the real estate exit. So the key insight here is that different buyers value different things. And for example, let's take a restaurant owner user scenario. And buyer number one is an operator who cares about cash flow and brand and operations, but might not necessarily want to own the real estate. So that client is going to prefer the business only. And two, there's buyer number two, the investor who cares about lease income, tenant stability, and the cap rate. And that buyer is going to prefer the real estate only, a leased investment. So let's talk about how pricing strategy changes everything. And this is where most deals can go wrong or sideways. And if sold together, you're blending a combined business value, usually off of an SDE multiple or a EBITDA multiple. And there's going to be a real estate value based off of a cap rate. And the result is there's often discounted pricing on one side, and you may not get a combined total of what you were thinking. And if you sell them separately, business is priced on its performance, and the real estate is priced on the income stability. And the result there is two optimized valuations. So the advanced strategy is the split and then stabilize approach. And this is where sophisticated sellers can win. Step number one is sell the business to an operator. And then step number two is put a long-term lease in place. Think 5 to 10 years of lease payments with strong rent coverage. And then step number three is turn around and sell the real estate to an investor at a compressed cap rate based off of the lease terms and the lease value. So why this works is you can convert uncertain owner-occupied property into a stable income producing investment And that concept alone can increase your value dramatically because people like mailbox money. So let's look about when it's best to sell together. And it's best to sell together when the business is highly dependent on the location. So if you have specialized build out, or if the buyer is likely an owner user, that's another concept. And there, the SBA financing is the primary exit path. And the simplicity there is that you get to maximize your value when you sell them together. Now let's talk about selling them separately. And you consider that when the real estate has a strong standalone value and the business can support the market rents, and you want to attract investors. So you're basically optimizing your maximum exit price. So let's talk about the Houston market insight for 2026. And in markets like Katy, Fulshire, and West Houston, retail and service businesses are booming due to population growth. And investors are actively seeking triple net leased assets. And owner user demand remains strong, especially combined with SBA financing. So the meaning there is you have optionality, but only if you structure it correctly. And that's something we could figure out over a conversation. So the final takeaway for the day is to stop thinking like a seller, but start thinking like a capital allocator. And the question isn't, how do I sell this? It's who values each piece the most and how do I sell to them separately? And that's how you are going to maximize your exit value. Now, if you need help structuring your sale, let's build a strategy that maximizes both your business value and your real estate value. My name is Bill Rapp. Please visit my website, HoustonRealEstateBrokerage.com, to figure out how to get a hold of me. Love for you to reach out and let's have a conversation. Take care.